So today I'm here with Steve Brewer, the president of People's Company. We're going to be discussing interest rates and farmland values. Steve's leadership has transformed People's Company from a small town real estate firm to a full service agricultural land transaction firm with a nationwide presence. As a prominent voice in this industry and a national leader in sustainable agriculture, he also helped launch Leading Harvest, established the Land Investment Expo, and created Iowa's first AgriHood, Middlebrook. We're so pleased to have him as a guest in our expert interview series. Thank you so much for joining us, Steve.
Thanks for including me.
Absolutely. Just to kick things off, we're going to lay some groundwork for listeners who may be newer to this topic. So could you please start by discussing the relationship between interest rates and farmland values and how that fluctuates or how those fluctuations typically impact the value of farmland?
Yeah, so interest rates have been really low, as everybody knows, for a long period of time, and we're just now entering into this period of high interest rates. And farmland has been the benefactor of cheap capital and cheap interest rates. And now we're going to get to experience what farmland feels like in a high interest rate environment. And there's some great data. Iowa State University tracks data on farmland values, and probably the best example I like to share with people, if you go back to 1973 in Iowa, farmland values were around $675 an acre on average. And that was the last time we had this inflationary environment and this higher interest rate environment start to transform. And by 1981, farmland values had gone up to $2,100 an acre. And then in 1981, for folks that remember that period, I was born in '81, so I've only studied it. But interest rates went up above the inflation rate. Paul Volcker was the Fed president at that time. And by 1987, farmland values, it came down to $875 per acre. So there's clearly a really strong tie between interest rates and farmland values. But the inflation rate at the time is also equally important. And so when you look at farmland returns and inflation, they're highly correlated to the positive. And so the more inflation you have, then the higher farmland returns you traditionally have. And so we're in this really interesting environment right now where you've got an inflationary environment, and you've also got a high interest rate environment, and those two forces kind of compete against each other.
Wow. And that's actually a really good segue into my next question, which is, are there any unique factors at play now that could disrupt this historical relationship?
Yeah, the visual I give people, we do a lot of farmland auctions all around the country, and right now, investors often are tempted by alternative investments, right? And so the visual I give folks, the farm credit system, as a for instance, probably quoting in that 7 to 8% interest rate range right now, and your cap rates on high quality Midwest farmland are 2.5 to 3. So if you're using leverage right now, it's a really, really challenging environment to use leverage on farmland investments. And also, if you're a cash investor and you're looking at investing in farmland, of these alternatives, bonds that have historically over the last 20 years not yielded well, money market accounts, CDs, T-bills, that sort of thing. And so now you have this alternative investment to farmland that's competing against farmland returns. And so the visual of driving to a farm auction, calling your banker, what's my interest rate on this farmland loan going to be relative to what my cash yield's going to be on that farm, and then compare that to what your alternative is. You're starting to feel a little tension there with both leverage buyers and cash buyers as farmland's now competing against T-bills and other things like that.
It's really interesting. Are there any main factors contributing to this trend right now? 2022 cropland values hit record highs. So maybe just discuss what you're seeing now and what's causing that.
Yeah, so the farmland market's been really robust. There's been a lot of money that's flowed into farmland through the years with some of the CFAP payments and the MFP payments. And so farmers had a nice run of payments that came out of some of those bills in the Farm Bill and the Inflation Reduction Act and whatnot. But then there's also been this low interest rate environment and this high commodity price environment and inflation. So when you put all that together, farmland's highly correlated with inflation. That's positive. Commodity prices have been strong. That's positive. Interest rates have been low. That's positive. And there's been some support from the federal government that's been going into farmers' checking accounts, which is positive for farmland. And so when you look at it, we've really had a perfect storm of things that play into these land values being where they're at. And now you've got this competing forces, interest rates move up, that's now competing against all those positive factors. And time will tell, does high commodity prices trump high interest rates, and time will tell. But we've seen even just in the last few weeks, some softening in commodity prices as well.
Yeah. What have you been seeing this year as the Federal Reserve raises rates?
There's definitely anxiousness from folks because, like I mentioned earlier, it makes it a real challenge for farmers or folks that want to use leverage on their farmland investments to use leverage in this type of environment. So each Federal Reserve meeting, folks in our industry are watching that now closer than ever, and it's definitely creating some anxiety. But at the same time, farmland sales have been incredibly strong, and farmers are making good money. So the fundamentals of owning farmland are great. You just got this headwind of high interest rates to battle through at the moment. And the other thing I'd add, farmland nationwide is only leveraged at around 13%. And so, commercial real estate and residential real estate suffers more from the high interest rate environment than farmland does. And a lot of your buyers are cash buyers that are buying farmland either generationally to, pass on to the next generation, or as the inflation hedge or diversification. And so even though interest rates have an impact, there's such little leverage used in farmland that it's not as significant as it is in commercial and residential.
Interesting. So what do you think the short-term and long-term impacts will be?
Yeah, I think over the long haul, we've actually been looking at some data on this. Farmland, even if you bought farmland in the worst possible time, if you've got a long time horizon, the key is you want to get into farmland. It's such a thinly traded asset. You've only got 1% to 2% that turns over annually. And what we're telling our clients right now is, because you don't compete against the highly leveraged buyers, and maybe because some of those cash buyers have some alternatives, it's a great buying opportunity to get into the market right now. And I think people that understand farmland understand that getting in is the hardest part, and that's the most important part, and getting access to the asset class. Then once you've gotten access to it, as long as you have a long-term time horizon, it really doesn't matter if you paid a little more in 1 year than if you would have bought it 2 years later and paid a little less. Key is you want to own farmland for the long haul. So in the short term, I think the interest rate impact could, tamper prices a little bit, but over the long haul, as interest rates stabilize, I think farmland is going to continue to perform really well.
Awesome. So what factors should we be keeping an eye on when we think about farmland values in the years ahead?
Yeah, I think you'll definitely want to watch inflation numbers. CPI number came out again yesterday, so that's not a number I was historically watching, and now all of a sudden I'm paying attention to what CPI is doing, paying attention to what interest rates are doing. And then I think the exciting thing about farmland is there's a lot of new optionality around farmland investments: wind, solar, carbon, and there's a lot of future payments that are going to accrue to the benefit of landowners. And so over the long haul, that, as they say, they're not making any more of it, and you continue to have more uses for farmland and ways to capitalize on your investment and whatnot. And so just paying attention to some of those programs around carbon and renewables, I think, is important.
So what strategies could farmers or agricultural investors employ to protect the value of their farmland assets?
Yeah, I think the big thing is just making sure you've got your interest rates set in an appropriate level. Hopefully most folks locked in those lower interest rates before prices or interest rates moved up. And then also just, there's two return components to farmland: cash yield and appreciation. And cash yield is usually lower than appreciation. And so managing those farmland investments for the long haul, making improvements to them and improving the farm, that's where you make your money in farmland, is that superior appreciation. So don't get caught up in the short term, economics, and think about the long haul is the key.
All right, so you talked about people just getting into it and getting some farmland to begin with. What are some of the challenges beginning farmers and investors new to the market may face right now?
Yeah, I think access for investors is a real challenge. We get called frequently from folks that like the idea of owning farmland and they don't know anything about it, and they'll fly in from somewhere on the coast and want to go look at farmland. And a lot of farmland sold via the auction method, and there's a lot of competition to own it and whatnot. So they'll fly in, look at a farm, want to buy it, go to the farmland auction, and they'll get outbid by a local farmer or maybe another investor. And so getting access to it, as I said earlier, where only 1 to 2% of the asset class turns over annually, being able to even get exposed to it and diligence it is a real challenge. And you really need somebody who's your advocate if you're doing that and you're not a farmland investor. And the ongoing management of those assets is really important as well. If you're a beginning farmer, there's some great programs out there with FSA for beginning farmer loan programs and whatnot. And if you can pair your personal investment with maybe an investor as well, a lot of these investors want to have a good young farm operator to collaborate with. And so if you can kind of take your personal dollars that you have available and collaborate with an investor to maybe expand their portfolio, you could have a win-win.
What do you think folks should be excited about in the farmland market right now?
Yeah, I think there's a lot of things to be excited about. One, if you believe in the fundamentals of farmland, growing population, rising incomes, demand for food, fuel, and fiber, those fundamentals have never been stronger than they are today. And so yeah, there's a tighter interest rate environment right now, but if you can get into the farmland market right now, where maybe there's not as much competition to buy farmland over the long haul, I think you're going to be really pleased with how the asset performs. I mentioned farmland's correlation with inflation, and they're almost perfectly correlated over time. And even in the 1980s, when we had a dip in the farmland market, I think the farmland inflation, farmland was 1.8% above inflation. So even in a tougher farmland environment, farmland still performed well relative to inflation. Over the last decade, farmland was about 6% above your inflation numbers. And so, if you believe in inflation, I think you want to be in farmland for the long haul for sure.
Can you speak to why farmland is so important to our communities and why that is an interesting investment option?
Yeah, when you own farmland, you own part of the fabric of rural America and the jobs that come with that, and producing things and growing things. And a lot of what we talk about is the financial benefits of owning farmland, and then there's all the non-financial benefits. And I really think during COVID that really shined in farmland. People could get out and they could touch it, and they could walk on it, and they could hike it, and they could hunt it, and they could fish it. And so I think more and more people are starting to appreciate both the financial aspects of owning farmland, but then also the non-financial aspects of owning farmland. And if you're part of those rural communities and your farmland investments generate jobs and generate wealth for the community, that's a really exciting asset to be a part of.
What are some ways people can learn more about farmland and how to invest in farmland?
Yeah, so there's some great resources out there for farmland. One, the University of Illinois has the Farmland Research Center led by Bruce Sherrick, and they've got amazing data on farmland ownership returns and all the 32 major agricultural markets in the country. And so they've got great data. I know the Acre Trader website has great data on the historical farmland returns. USDA keeps great records on farmland returns going back, I think, even to the 1950s. Iowa State University, I'd mentioned, they're required by the Iowa legislature to do a average land tenure study every 5 years, where they research demographics behind who owns farmland and whatnot, and they keep great data on farmland returns. And then the professionally managed farmland that the institutions own, NACREIF, the National Council of Real Estate Investment Fiduciaries, they track the financial performance of professionally managed farmland, including both cash yield and appreciation. And so those are some great resources for folks. If I can make a plug, we do an annual report called our National Land Values Report, where we aggregate the NCREIF data with the USDA data and then put some color around it at our regional offices around the country. So that report comes out every October. And then we also host an annual event called the Land Investment Expo, where we bring in about 1,500 folks annually to Iowa, and we cover the topics of investing in farmland and the trends and themes and what's happening in farmland. So it's an exciting asset class to be a part of. And you'd mentioned the farmland community earlier. That Land Expo is a great way to kind of mingle and meet other folks that believe in the asset class.
Awesome. Thank you so much. What are some of the biggest takeaways you hope people get from this conversation? What should they be excited about? And what should they also consider if they're just getting into this?
Yeah, I think farmland, I'm biased. That's what I do every day is manage and sell and appraise farmland. And I can't think of a better asset class to invest in. And when you look at the data is there to support that. It's non-correlated with the equity markets. It's correlated with inflation. I touched on some of the things around, the crop insurance guarantees and the non-financial benefits of farmland. I mean, when you add it up, and we get to interact with a lot of folks that invest in farmland. And I always say, a lot of these high net worth folks, once they've achieved all else in life, they've sold their businesses and whatnot. A lot of those folks like to invest in farmland. That's where they'll put their generational wealth. And so I think, if you can, you never talk to anybody who buys a farm and regrets buying a farm, right? And I used to joke around that we offer a money back guarantee on every farm that we ever sell because, nobody ever wants their money back. And when you look at farmland and you look at the cash yields, a lot of times those cash returns will feel low. But when you look at that total return, cash yield plus appreciation, and the appreciation's real. It's not arbitrage. It's not something that you're hoping for. When you look at the trend line and yields on corn, for instance, corn yields continue to go up and up and up, almost in a straight line. And so farmers are getting better at producing more per acre. Yields are going up. They're getting more efficient at farming. You've got the non-financial benefits, and then you've got these external things like carbon, wind, solar that are coming into farmland. And so when you look at all of that, it's a really exciting asset class to be in.
Yeah, I think so too. Well, I think that wraps up our interview. I really appreciate you discussing this topic with us, and hopefully we can have you on again in the future.
We'd love to be a part of it. Thanks for covering it.
Thanks, Steve.
Thank you.